Hi everyone, my name is Robin Speziale and I'm the national best-selling author of Market Masters, Interviews with Canada's Top Investors. So today we're going to be talking about Peter Hodson, and Peter Hodson is the founder and chief analyst at 5i Research, a Canadian no-conflict stock investment research firm. And my interview with Peter Hodson originally appeared in my book, Market Masters, which released in February 2016. So if you want to see my full interview with Peter, you can stop by your local bookstore, Chapters Indigo, Kohl's. In Canada, it's also at Costco. You can find it on Amazon.ca, or if you're in the States, you can go to Amazon.com. Anyways, here's a brief intro on Peter Hodson, and then I'll get into Peter's 21 investing lessons that I summarized from my interview with him back then in 2015. So Peter Hodson finally hung up his hat in 2011 after wrangling up tremendous returns in the Sprott Growth Fund. Sprott is a hedge fund here in Toronto. It was a high-risk, small-cap growth fund, like a cowboy fund, Peter said. After a disagreement with Eric Sprott, founder of Sprott, over the fund, followed by a 62% drop in 2008, Peter finally decided it was time to ride out into the sunset. During the resource bull run from 2002 to 2007, Sprott Asset Management was a high-flying firm. As Peter quipped, his experience at Sprott could be a book on its own. Today, Peter Hodson, like I said, is the founder and chief analyst at 5i Research. The CEO now is Ryan Modesto, who started out as an employee at 5i. It's an independent research network that provides conflict-free advice to individual investors. The 5 I's stand for integrity, independence, individuals, investments, and insights. Peter said, "We're just trying to use our experience to help people." Through 5i Research, investors can get access to many easy-to-understand research reports written for the average investor with a simple rating system from F to A+. Additionally, the company offers 28,000 plus questions that have been answered by Peter himself, as well as 3 model portfolios to follow. And it seems that Peter got trigger happy again because he recently announced the introduction of the growth portfolio model in addition to the income and balanced equity models. Once a cowboy, always a cowboy. Peter still got a good shooting hand, judging by his ability to pick off high-flying stocks in today's market. For example, Peter picked Amaya Gaming before many investors even knew it existed on the exchange. It was April 2013 when Peter said, "3 very good acquisitions have set Amaya up for excellent growth and is well positioned to benefit from the legalization of online gaming. Revenue growth will be big this year and the company is becoming profitable. It is well managed, has excellent shareholder support, and is a relatively unique name in Canada." Following that recommendation, Amaya went on to post a whopping 500% gain through 2015. It will be interesting to follow Peter's new growth stock picks, and you can follow his picks on 5i Research. The growth portfolio, now back in 2015, I don't know what it is today, but his growth portfolio held 22 securities, and it was biased towards the technology and healthcare sectors, 2 areas that Peter said he expected strong growth in the near term. As Peter explained, there are also usually the more growth-oriented sectors. These are also the most growth-oriented sectors. Peter is also the owner of Canadian Money Saver, a fully independent financial magazine, and I've been a reader of Canadian Money Saver for years now. I've picked up, copies here and there throughout the years at Chapters. It's a fully independent financial magazine. First began publishing in 1981, and Peter actually bought the magazine, I believe, 5 or 6 years ago from the original publisher. Peter and I arranged to meet for the interview for Market Masters at Coffee Culture, which is located in Uptown Waterloo here in Canada. Memories of my University of Waterloo days flooded over me as I drove down King Street. When I arrived, I ordered a nice coffee, secured a table, and waited for Peter. When he entered the coffee shop wearing a tan leather jacket, black shirt, and jeans, it felt almost like a scene from a cowboy flick. The lead walking in through the swinging saloon doors, seeking either a drink or a showdown. Our conversation was as entertaining as it was insightful, although no one was thrown through a saloon window. Peter's a funny guy who has a fun and compelling way of presenting his stories in the market. And here's coming from a self-proclaimed cowboy from the cowboy days at Sprott Asset Management. And I've summarized here 21 of Peter Hodson's most insightful investing lessons he shared with me, which you can find in my book, again, Market Masters, which is available in chapters in Indigo's Coles, as well as online on Indigo, Amazon, and even Amazon.com. So here are the 21 lessons from Peter Hodson. Number 1, the best lesson is losing money. So I learned some really good lessons, Peter says. Number 2, I saw everybody do the exact wrong things for the exact wrong reasons. I saw greedy people get killed, and I saw fearful people get killed. And this is Peter discussing the market cycles, especially at the top of a bull market. Number 3, that do nothing lesson was huge for me, especially when I became a fund manager. The tendency to do something because you're getting paid is really high. Number 4, corporations think differently than investors. As a corporation, you don't really care what the stock's doing right now. Number 5, sometimes it doesn't even matter how good of a company you are. If you're right, in the right sector, you're automatically hot. Number 6, I've probably made more money from this philosophy than anything else. You have to take a stock from $2 per share and go to $4 per share, and then be willing to buy more of it at 4 than you bought at 2. Number 7, there's this really sweet section of companies that go from 50 million in market cap to 100 million in market cap. At 100 million, people start caring. At 50 million in market cap, they don't care, but it's exactly the same company. 8, you have to take that leap of faith and convince yourself that you're right. And that's hard to do, pulling the trigger. Number 9, we had a whole portfolio of 200, 300% potentials. And of course, they're not all going to work. Some are going to flame out badly, so we needed the big giant ones to make up for the ones that went to zero. And that was Peter's experience at Sprott Asset Management, where Sprott would hammer home, guys, we need to look for the ones with the biggest upside. I don't care about the ones that might go up 50%. Number 10, one of my mantras is not to sell too early. You're never going to get a Google or an Apple or any 50 bagger if you sell too early. Number 11, I assume every stock I own could drop 50% tomorrow. And that's what a lot of investors have to understand, is that especially in these more volatile, smaller companies, small cap companies, that you have to stomach the volatility, the ups and downs of the stock price in the short term. Number 12, if it's an A-rated stock, you can own it for 10 years and not even care. The market will go up, the market will go down, the stock will go up, the stock will go down. But through it all, it's a fundamentally secure investment that's not priced ridiculously high, and that's not one you have to worry about. 13, every time I saw one of my stocks go down, I would basically ask myself, why are people selling? Are people selling because of earnings? Are they selling because they're worried about the market? Or are they selling because it's down? 14, I think in periods of time there's massive inefficiency, but over a long period of time it's more efficient. 15, we barely make any changes ever, because if we've chosen right, we shouldn't make any changes. And that's Peter talking about the stocks he holds in his portfolio. There's very little turnover in his model portfolios, and that just shows that there's more legwork in the research that he does up front before he buys his stocks. Number 16, on the tech side, if you're early on a theme, then it really works for you, but it's harder for Microsoft to grow at a fast rate, whereas it's easier for the little guys to grow. And that's just Peter alluding to the law of large numbers, right? It's easier for a 100 million market cap company to grow and to double than it is for Microsoft to double now that it's, over 500 billion in market cap. So number 17, put yourself in a position to ask yourself, why am I selling? But more so, ask yourself, why the other guy is buying it from you? Are they buying it because they think it's going to go up? If yes, then maybe you should rethink your position. 18, companies that grow their dividends are vastly superior to companies with high dividend yields. Don't get sucked into the 8% yield. Buy the 1% yield that's going to go to 2, 3, 4, and then 5%. 19. If you consistently invest, then it really doesn't matter if the market goes up or down. At the end of 10 years, you'll have a good average price. 20. If I had $1 for every person who said, I'll sell when it breaks even, I'd be a bazillionaire. Breaking even is a bad investment strategy. 21. And this is the final investment lesson from Peter Hodson. One of my best techniques to finding a great stock is to just look at new highs. When you see a new high, ask yourself, why is that a new high and what's the deal with that? And this is a really important one. Number 21, what I do, I go to stock charts and I go to the predefined scans on stockcharts.com, and every day there they'll update the new 52-week highs, and you can get some new fresh ideas there, because stocks that are breaking new 52-week highs, you have to find out what the news is. Have they acquired a new company? Have they been acquired? If they just release a great quarterly report where they had a beat in their earnings expectations. So that's definitely something that I mine every day. So again, this was the interview I conducted with Peter Hodson of 5i Research, and the interview appears in my book, Market Masters, which you can pick up at Indigo Coles chapters. You can go to amazon.ca, amazon.com. I hope you enjoy the interview, guys, and have a great day.